GM, GM. Tuesday, 20th of February, daily levels. So we're looking okay. Bitcoin itself looks great. Moved up into the highs, compressing with low volatility, consolidating nicely. It's looking pretty much like it did over here at the beginning of the rally. So you've had one leg up, consolidate, second leg up, consolidate. We could be setting up for a third leg. There is obviously a lot of gaps or a lot of room below for flushes and shakeouts. And, as I look at it today, I see a few reasons to believe we can go down and a few reasons to believe that we don't need to go down. The first most important thing is always price, and it's always the price of Bitcoin. And so Bitcoin's price to me is currently compressing with low volume, low volatility after run up. So that's good, right? Just like here. If it just keeps chopping around but getting into compressive pennant, right, where it's making lower highs and also higher lows. So it's compressing. That can usually be a sign of a nice big move to come, whichever way it breaks, by the way. It doesn't have to break to the upside, but of course, when you actually wait and you see the break happen, it can lead to an extended move. That could be the move that takes us up to the high 50s. I don't think that's going to happen this week because of options expiry, particularly. If you look at the Deribit OPEX, we've got the big call wall and essentially a lot of open interest at 50k, also 52. And as we get closer, there's only 3 full trading days, today, tomorrow, Thursday, before that options expiry, which happens early Friday morning. It's easy to imagine and easy to see that Bitcoin might stay above 50 and below 52 until Friday, unless something happens really today, unless there's some kind of move today. I would expect that we probably just continue to consolidate with relatively low volatility. So as long as BTC maintains this type of structure, then I would expect continuation to come. Then the only thing, or not the only thing, but one of the things that's sort of given me a little bit of a pause for thought on that would be alts, and including Ethereum now as well. So you've got a scenario where Bitcoin has had a nice move up. Bitcoin is consolidating sideways, and altcoins are leading. So you can see here with total 3. Where's total? Why is it both not on? Oh, it's total 2. I just put total 2 on twice. Very good. There's total 2 and total 3. So as Bitcoin went sideways, total 2 and 3 both broke out to new highs. So that means, quite obviously, altcoins are leading. Altcoins leading is not a bad thing necessarily, especially not in a bull market. But often, when the altcoins lead, it ends with some kind of shakeout or leverage flush or dip or correction or whatever, and then Bitcoin takes over again. And since we're getting closer and closer to the halving, which I believe the date as well for the halving has changed, it was the 20th of, it was meant to be the 20th of April. I think it's actually going to be the same 24th now, so it's pushed back ever so slightly. That's because it's not done on a fixed date. It's done based on the blocks. Every 210,000 blocks, you can see. A block is produced roughly every 10 minutes, but that changes. That's not a static thing. It's not fixed. So I can definitely see. Let's put it this way: we're not at the 24th of Feb yet, so we have more than 2 months until the halving. Can we see a dip before the halving? Right, that's the question. Can we see any kind of dip that's deeper than 10, let's say 10% or more? Right, that would be what would be considered to be a proper dip for Bitcoin. We've had a bunch of them right on the way up, which were 10%, a couple of 10%. Then we had one that was over 20 earlier in the year, or earlier in 2023. We had a 20% and a 20%. So could we see a 10% correction on BTC before the halving? I think yes. And so obviously, spot bags wise, I'm fully packed. Got my Bitcoin, got some Ethereum, got my cash. I've got my spot bags. I want to buy more spot over the coming months, but I'm fully allocated from my the 2022, 2023 bags. What I'm saying about buying or getting long, I want to add long positions onto my existing bags when I see some type of, asymmetric risk reward, some type of no-brainer setup, which to me would be a leverage shakeout. I've been taking this and trading these shakeouts all the way up on low time frames, just some day trades. But to add anything beyond that, I would need to see something a bit bigger. So I'll trade short term. Like if Bitcoin continues to compress like it did back in, I'll just go to the 6 hour, you can view it. If Bitcoin does another one of these and spends another few days compressing, especially with the options expiry, right? If we went sideways until Friday within this tight range, and then it started to make a move up, going after Friday's OPEX, so Friday main session, Friday about 8 a.m. UTC. If it starts moving then, and I think that this compression is leading to another squeeze up, I'll certainly trade it. But that won't be like getting long 52, expecting it to go to all-time high with no potential downside. I do still think the downside risk is there currently. And mostly that's driven by altcoins. Because when you look at the funding, I talked about this and updated the map here. Whenever funding rates on these maps gets yellow, that's extreme positive. You can see here it's color coded. So when you've got in the middle green, neutral. On the far left, you've got purple, which would be extreme negative funding, and on the right you've got yellow, which is extreme positive funding. This is a monthly map. So all the way back to January, everything was basically neutral or negative. Right now, as we've been going through the month and into February, it's getting more and more and more and more towards the positive side. And that's not just on one, that's across large caps, mid caps, small caps, across the whole market. So we're seeing more and more and more leverage or futures-based positioning entering. Here we've got the open interest for we're just going to look at this rally. On this rally, Bitcoin is up, obviously, from 39 up to 52. Really nice run. Very spot-driven rally, which I'll show by this. There's a 40% increase in open interest throughout this run, right? 4 billion of OI has been added. That's not nothing, but that is less than you would expect to see normally on a Bitcoin rally like this. Bitcoin actually is very much being driven by genuine flows and spot demand from the ETFs. We know all about that, right? I think this is one of the healthiest markets we've ever been in. And the systemic leverage is super low. What do I mean by that? It's hard to it would take a long time to explain, and I will explain it on a live stream when I have a bit more time. But the 2021 bull market 2020 and 21 was a lot of it was driven by specific structural trades like the GBTC and ETH trades, and large players, hedge funds and Wall Street players and TradFi guys, they essentially played this big carry trade where you could buy Bitcoin and then, get long GBTC because there was a premium, right? There was a premium, and you could essentially take the trade where you would buy spot and short futures. So there was two trades. There was a basis trade throughout the bull market. You could buy spot and short futures because funding rates on the exchanges were positive. And then as we headed towards 2021, late 21, I think it was February or March 21, the GBTC premium flipped into a discount. And when GBTC went into a discount, that meant that essentially it was like free money, because if you thought that the gap would ever close and GBTC was trading at a 20% discount, you could long or buy GBTC, and then eventually when it gets converted to an ETF or whatever, you could redeem it and it would come back to par, and you would have essentially bought Bitcoin at a 20% discount. It went as high as a 50% discount. And anyway, the point is, none of this was really driven, none of that was driven by genuine demand for the underlying. It was just these structural inefficiencies where there were discounts on one side, there was high funding rate on the other side, and you could play a basis trade, a carry trade, you could play a mean reversion of the GBTC or ETH, the ETH, the two TradFi trusts that Grayscale had for people getting access to Bitcoin or ETH. This time, it's not that. It's super, super spot driven, genuine demand. The market has, risen all this way without a massive buildup of leverage. There is still the usual, every time we have a rising market, open interest is going to rise, funding rates eventually rise, leverage comes in. But we've seen already that, Bitcoin had that rising market, higher funding rates, and then we had the first shakeout. The first proper flush was here, right before the ETF, and we saw funding rates just neutralize completely. So the speculation takes us so far, and then it gets wiped out. But what you would normally see is when there's such a move like that takes Bitcoin and the altcoin funding and resets it completely, you'd expect a much bigger down move. If this whole move was supposedly just driven by leverage, like bulls would tell you, then why did the funding and the open interest fully reset at higher prices? Because when it dropped back, there was a spot demand waiting. And we saw that Bitcoin barely got below 40 and it was bought straight back up. There's genuine spot demand there. So from a trading perspective, it leaves in this weird scenario where Bitcoin's really good, really healthy, and is driven by true demand. But altcoins are starting to get, like we've seen with the funding and then the open interest, altcoins since that bottom have added 5.5 billion. So there's been more positioning added on altcoins than on Bitcoin, just looking at the crypto exchanges. Both by dollar terms, so Bitcoin up at 4.5, alts up 5.5, but also percentage-wise, Bitcoin's OI is up 40%, so that's the increase. Altcoins OI is up 65%, and it's been really a one-way march, just straight up. And then you see the funding rates since like the 13th, so over here, the funding rates really turning positive towards the top, and altcoins leading, like I showed. Ethereum's outperforming Bitcoin on lower time frames. Total 3 keeps rising higher, and that just tells me that one, that's healthy, right? As we said, you need some kind of positive funding rates because that shows that people are willing to enter positions. They're essentially adding risk. They're coming in. They're bullish. They want to trade. They want to get in. That's good. You don't want to see people not interested, right? You want to see them with interest in the markets. But from a trading perspective, I look at it then and say, okay, if it's like that, how much further are we going to go with these crazy high funding rates? I would say a little bit further is definitely possible. I think the market that has moved up from being negative funding and neutral funding to rising up now, and this move pushing funding higher and higher and higher, but also pushing open interest up and up and up. That's just like slowly and slowly and slowly every day building up more energy. And eventually, I think we're going to see one of these wicks here, right? One of these flushes, probably down into the daily bands, as that has been the trend. A couple of them over here and here and here and there. And to me, we haven't touched the daily bands once on Total 3 since this move started. And so that's where I'm looking at, or not what I'm waiting for. And that's where you're looking at your altcoins. That's where you're going to see your 20% red day. And when will that be? I don't know. I'm guessing it's going to be sometime in the next 2 months. I certainly think it's before the halving. I think Bitcoin will broadly be higher now. Like I think Bitcoin will be higher at the halving than it is today. But we don't just go up into the halving. Typically it goes up before the halving and it actually sells off slightly just a few days or a week or two before the halving itself. So I think the next couple of months offer some really good trading opportunities. My main focus is my spot bags and Bitcoin and AKT especially, but also I've got a little bit of Ethereum. I might increase the Ethereum if I think that Ethereum is going to have a sustained period of outperformance. And outside of that, the trades I want to take are just really, when do people get leverage flushed and then I buy that dip. That's really the main focus. That's what it was doing all the way through October, November, if you remember. Anytime there's one of these flushes, you're trying to get long somewhere in here and targeting a new high. And on altcoins, that could be 20, 30, 40, 50% moves, if not even higher. So you don't have to, like, we're talking, when I look at it, the perspective of how do you get exposure to the whole thing? We've had exposure to every single tick of this move. I've owned my main AKT bag since June. So all of this move I've been fully exposed. I've held Bitcoin all the way through 2022 at the end, into 23, all the way through 2023. And since the breakout, again, been fully long Bitcoin. So all of these moves, you're getting every single tick by just being long, by owning spot. That's why I say that it's so important. You're not going to outtrade the market with your entire portfolio. It's pointless because your coins will just go up because we're in an early bull. And every single tick of this, just don't sell. Don't go to cash. If you don't think the bull market's over, why are you selling your cycle bags? Then, trading wise, you're trying to increase your stack by getting an entry and getting out. Getting an entry when people get flushed out, getting out when they get too excited. And that's sort of why I want to just be really clear, because I'm not bearish on the market, even slightly. But pullbacks will absolutely come. And the exact same reason why I bought ETH down here, I bought a cash down here, and I bought Bitcoin down here, and I got long Bitcoin down there, and then I got long Bitcoin again here. The reason I did all that is because of this exact thing. When it gets shaken out, when everyone else is crying and bearish and footing it, you want to be getting long. Then, once it reaches a point where suddenly people are feeling safe, in air quotes, to get long, or they're talking bullish again, or they're all happy, that's not where I want to be adding longs. That makes sense? So get long when you don't feel like it. Take profit when everyone else wants to get long. That's how you trade on top of your spot bags. The reason you hold spot, though, is so that you don't even have to think about that. You can just go to a fucking monthly chart and just look at it and say, every single part of this up move I've been fully exposed through spot. If I then want to trade on top of that, that's where I'm looking at, okay, when are people getting too bearish? I want to get long. When are they getting a bit too bullish? I want to just not go short. I want to just take profit on those longs. Yeah. The other thing is now it's higher beta stuff that's leading. So if you remember all the way through this rally, it's been Solana that's led it from altcoin perspective. It's not Solana now. That's a subtle change to me that tells me that the market is shifting into something new. Typically that could be we had Solana, we had Injective, right? We had Link, and we had, what else was moving up well? Those are the main ones out of the pre-existing majors. So Link's obviously still doing quite well. But Solana and Injective, which were like the two real big winners in the October rally, they are now lagging. They're not making new highs. But Total 3 is making new highs. So part of that's Ethereum outperformance, not for Total 3, but for Solana weakness. If Ethereum's strong, Solana might suffer. So Total 2 is going up well too. But Sol ETH, as you can see, Sol ETH is now getting really flipping back towards Ethereum. I then look at it and say, well, what is driving this move up? And a lot of it's AI. So a lot of the AI coins have been going really well. You got Render moving up. You got Fetch moving up. You got obviously AKT's been doing really well. We'll talk about that in Trade of the Day. You've got BitTensor, which has been moving up a lot as well. So the market is moving and shifting very much towards that AI narrative, which is the only thing I've talked about for the last few months. I think that's the only sector you need to focus on outside of your majors. Anything else to me is just noise and distraction. But on this lower time frame market that we're in, the fact Solana is no longer leading and the fact Injective is no longer leading, it tells me that the market might be moving down the risk curve. It might be chasing the higher beta stuff. And oftentimes that can be like a sign that we're moving later into the overall rally and that there might be some type of cool off or correction or sideways that's to come. I don't think that's near. I don't think that's here yet, because when you just look at, like, again, back to Total 3 and stick to the weekly, it broke out of its August highs, right, in December. It consolidated above those highs for 5-6 weeks, and now it's starting to push to break out. it's not like it's done this. It's not like we're up here and it's been up only and parabolic and crazy. It's literally consolidated in the bands, just like this. It's consolidated against the bands. It's nowhere near done from a pure price action perspective. So I'm far from bearish, but I am looking at the rate of change of open interest and funding, and it would tell me that you're probably going to get a decent chance to buy a nice dip, right? Buy a nice strong correction at some point. And also, it doesn't mean that this is like destined to just go straight up, right? It's pushed above the highs. It could easily drop back. It might spend another few weeks. It might touch the bands again. It might spend another few weeks between 480 and 580 or 480 and 550, whatever, to just consolidate and compress and consolidate and chop people up, and then eventually it breaks higher. That's how I would look at it. Obviously, stable coins as well. So stablecoin markets are rising. So money keeps coming in. That's good if that continues. Bitcoin dominance is kind of just chopping at the highs and consolidating around here. A lot of people think this is already topped. I don't think so. I think actually, given that Ethereum has really went on a little push there last week or so, the fact that BTCD's barely moved and it's just holding up and it's holding the weekly bands and we're getting towards the halving, I think again people are going to abandon Bitcoin too soon and Bitcoin's going to make another run. I do think Bitcoin goes towards 60% before it's finished with its real dominance run this cycle. That doesn't have to happen right away, but I would say that leading into the halving would be a time where you'd expect, typically, for Bitcoin to steal the show. Everyone starts to talk about it. All the TradFi money, there's going to be a lot of demand coming in from there. So that's how I'm looking at it from here. So at some point, there's a dip coming. From a trading perspective, I'm just going to wait for that dip and wait until I see some blood. Wait until I see some of this OI getting wiped. Wait until I see the funding rates, tick back down a little bit. They don't have to go back to red or to purple or to green neutral, but they should cool off a little bit. Yeah. Some type of reset, some type of healthy dip. You can see what a healthy dip looks like, from over here on any of these moves up. Like even just some of these shakeouts over here, you just want to see like this. This is like the perfect one where it had initially been rallying up and rising and rising and rising. And you have a short, sharp, swift correction. And then it goes right back to accumulation, and altcoins and obviously the whole market kept rising. This move up now is even more steep in terms of the rate of change of the open interest for alts. So I just look at this and think, there's no way that this doesn't have some kind of leverage flush at some point. And without trying to time it, which there's no point timing it, you can just wait. When I see 10s, 20, 30%, corrections across altcoins, which probably means maybe Bitcoin has a 10% correction. And if we're starting to see some alts dipping back into wherever it is, their daily bands, and you're looking at the leaders like the renders, you go on the daily, right? Render can go all the way back on a wick into its daily bands down here. And it's always at that point where you think it's not gonna, like, oh, breakout's so strong on render, it's not gonna stop, it's not gonna pull back. Yeah, that's always how it feels. But look at how how deep the wicks can go. Like here we go on this move up on render. Look at that deep wick. This is on a single day. That's a 23% move down from the top to the bottom on a single day. Here, that's a 17% in a single day. And was render at any point bearish? No. This is a super solid uptrend. Hits the bands, reverses, dips through the bands, reverses, fills in some inefficiency, and away it goes. So that can and obviously will at some point happen. It doesn't have to happen from here. Maybe render goes higher first. But as I look at render, I think it's going to run for its all-time high at some point. But that is still quite a bit away. Right? That's all the way up here. And in between now and then, you can have at least one more decent dip or shakeout. And if render was just to dip down into the daily bands from here, like from this most recent local high, that's a 15 to 20% flush. That would take out all high leverage. That would give you a good opportunity to get in when the market's still bullish, when the bands are still green, it's all still completely fine, And so I wouldn't be surprised to see that happening something like that at some point, where it gives a push then towards all-time highs. So that's it. That's the market, GM. See you all later on the live stream.